Vedanta, well, they have approved an interim dividend of close to around 17.5 rupees per share. With this, the total dividend payout is around 6,500 crores. The other talking point is that, Vedanta, well, there's been a big move in metal prices. So what's the outlook from here on? To understand that and more, we're joined with Mr. Sunil Duggal, the Group CEO of Vedanta. Hi, Mr. Duggal. Good morning. Thanks so much for joining in. Well, things are turning around in China with a bit of an unlock that's playing out. So that's good news for metal prices on the whole. But let's talk about the dividend aspect first. Year to date, you've already declared a huge dividend, 68 rupees 50 odd. Is there more in store? Because shareholders, they would love some more dividend. But in FY23, are you done or still more in store? Go ahead.
It's a board matter, and depending upon our cash position, we have been declaring the dividend. So depending on how the stocks will perform, how our business will perform, we will keep evaluating this option at the board level, and will come up the proposal to the board as required. But just to let you know, the business conditions are good. The metal prices even now are looking healthy. You must have also seen the upsurge in the prices from now on.
Okay, that's always good to hear. The business conditions are good. Mr. Duggal, good morning. Since a large dividend is being paid out already in FY23, wanted to understand what the impact of all of this would be on your debt. I think in September of this year, your debt was a little over 32,000 crores. Could it get higher over the next 6 to 12 months?
Well, we have declared to the market that in the next 3 years, at least, we deleverage our debt by around $4 billion. And you must have seen what we have done in the first few months of this year. So that is what the intention is, that we will reduce our debt at the parent level, and that is what the priority is. But with the healthy cash flows and the better margin and the metal prices looking up, this option will always be available with us.
Right, Mr. Duggal, hi, good morning, Prashant here. And that last thing, metal prices, right? I mean, that can swing fortunes so massively for you, as it did earlier as well. So just give us a real sense, because I mean, you've got your fingers in pretty much all the metal pies, right? And oil as well. I mean, what's your sense? Have prices kind of bottomed out? Are we starting another? Is it possible if China reopening? I mean, there was a Reuters story which said that China is going to put out a plan tomorrow about reopening in January. Expectation was that that's going to only happen a few months down the line in 2023. So they're sort of quickening that process. Is that very supportive for metals? Which are the ones, according to you, which are placed in the best possible shape? Just some color.
So 2-3 factors here. One, now the China is easing out the COVID norms. You must have seen, you must have heard also now. A lot of cities have eased out the norms. The economy is picking up. They have reduced the reserve requirement ratio of the banks, and they have given the direction that the real estate sector should be supported. They have given the stimulus in the month of October. We expect more stimulus to come. If you look at US, the inflations are easing out, and from that, I would expect that the Fed would not increase the interest rate from now. Also, in US, the inflation has eased out, and with this, you must have also seen in Europe, half of the aluminum capacity is cut, a quarter of the zinc capacity is cut. So the overall stocks of all the metals have come down. These are almost the record low level. With these fundamentals, you must also appreciate that the demand of the critical metals for decarbonization have not reduced at all. And you must have seen the growth of this coming up in all the geographies. And with these fundamentals strong, you must have seen of late, again, the rally has gone up as far as the metal prices is concerned. But what is important for Vedanta is that we control our own internal factors where we integrate our operations, especially aluminium, like zinc we have, and we remain in the lowest cost curve, and the margins remain healthy. But the way the market looks and the requirement of the critical metal remains high because of the decarbonization efforts of the world. I'm sure the metal Vedanta is dealing will always be seeing the rally from now on.
Okay. Mr. Duggal, I just wanted a few numbers if you can share with me. You said that you're looking to deleverage your debt by $4 billion over the next many years. But just in the next 1 year, how much could your debt come down by? What will your capex be? And any outlook on how much of that could be allocated towards dividend?
You see, I mean, with the healthy cash flow of the current year and the next year. So in Vedanta, we are doing all debottlenecking efforts and integrating our operations. And with the investment of $5 to $7 billion over the next 3 to 4 years in our capex, rising our oil and gas production, rising our steel production, rising our aluminium production, adding the value-added business, operationalization of the coal mine, raising the alumina capacity from 2 to 5 million ton, finishing the capacity in electro steel. I expect the revenues could go up to maybe $30 billion next year, and with the EBITDA margin of 30 to 35%, our EBITDA could be $10 to $12 billion. So with this strong position and healthy cash flow, we will have many options to pay the debt as well as service the requirement of the capex.
Yeah, Mr. Duggal, you're sounding quite optimistic, but it's a commodity after all, so things could swing around. But we take your point. You briefly mentioned electro steel. Now, some reports indicated you're looking at selling that asset. Can you clarify?
That option is not there at this point of time on our table.
You're denying that report that you want to hold on to electro steel, and in fact, you'll be expanding capacity out there as well. Is that correct?
Yes, that's right. So currently, we are busy increasing the capacity of electro steel by finishing the unfinished plant from 1.5 million ton to 3.5 million ton. So with 3.5 million ton at electro steel and 1 million ton at value-added business in Goa, the capacity will go to 4.5 million ton. But you must have also seen that we have taken action to integrate our operation by acquiring the mine, Barmil mine in Orissa.
Right.
So this gives us the option to increase our steel capacity from now on, and remain a player to reckon with in the market. And if we will stay in the steel market, we will definitely like to be among the top 5 players, not very far off from today. And would be very excited to raise the capacity, steel capacity, to beyond 10 million tons.
To 10 million tons, that's the longer term. So you don't want to sell electro steel. In fact, you want to ramp up capacity towards 10 million tons. We take that point. Let's talk about your zinc business then. There was some speculation earlier that maybe the international zinc business from Vedanta will be transferred to Hindustan Zinc. That's off the table, or is that still on the cards?
You see, there is a natural synergy between the two companies. So the international zinc business is located in the geography where the skill for the mining is available. Fundamentals of Hindustan Zinc have been so strong. The company very successfully transitioned to underground. We are the largest integrated metal producer in the world. The resources in Zinc International are even bigger than Hindustan Zinc. So if the Hindustan Zinc produces 1.2 million ton, there is no option that Zinc International should not produce more than 1 million ton of metal. So the exploring the opportunity where both the companies can complement each other. So we have been evaluating, but this is more like a board matter. I'll not be able to comment on this at this point of time.
Okay, we will end this discussion on that note. We've gone on for a pretty long time. Thanks a lot for joining in and speaking to CNBC-TV18. That's the word coming in from Vedanta. Let's slip into a quick break. It's the end of the year, so everyone's in travel mode. Let's talk to the management of IHCL, Indian Hotels.